Hello, ladies and gentlemen, and welcome back. Well, what a 24 hours that was. The FOMC came out with their statement, and it was pretty much more of the same. But what happened on markets was a super rally. We saw gaps fill on the SP500, new highs being formed, and while there might be a little bit of a pullback first, potentially we're intact to go towards something that we've discussed for quite some time, the 20 moving average, the mean reversion. So will we see some further bullish action followed by a bit of a bear bust? It seems like that's the way markets are shaping up. Stay tuned as we go through the macro and of course the technical charts moving forward for both stocks, commodities, cryptos, and of course indices. See you soon, guys. This will be a good one. Well, welcome back everybody to the Daily Show. We'll begin here by talking about earnings. Let's discuss Facebook revenue declines for the first time in a long while. Meta's downfall is now expected to get worse. Look, the stock market already expected this. Remember, this is an earnings season where expectations are not high. Therefore, the stock was allowed to rally. But the problem is going to be continued. TikTok is really denting a lot of these social media platforms. And I think you've got to look at that as the trend. So be careful out there, guys, that are really looking into Meta. Maybe it's not the growth stock it once was. And I think that's clear to see on the charts, as many people expect. The big story, though, was the FOMC statement. Obviously, they raised rates by 75 basis points. That was 75% of what economists expected. The stock market took that as a positive. And there was nothing really said in it that changes the game. It said here that the Fed anticipates that ongoing increases in the target range will be appropriate. So basically more of the same, more, yes, we're going to raise rates. Yes, we're going to look at the numbers. Nothing new. The stock market was like, you know what? Let's go bullish. And that's kind of around the ideas that we've been expecting so far. A bullish movement into a potential sell-off here in the stock markets. And then the real question is, are the lows in? Or will we see a new low on the stock markets formed over the next coming months? Well, let's discuss some of the reasons why the markets are going bullish right now. Too many bearish retail traders. A lot of you posted yesterday saying, well, you know, retail traders aren't that stupid, Tom, anymore. You can't say that. Yeah, I agree. A lot of us are educating ourselves to become better and better and better. But the general fear out there of the mums and dads and people that aren't educated in trading and in investing will be pulling money, freaking out. A few weeks ago, I heard of many money managers getting called by their investors saying, hey, I want to take my money out of the market. This type of thing then triggers that rally. And that's why we've been discussing the idea that the market is in this shorter term bull potential trap here where the market will move towards mean reversion. We'll discuss that very soon in the video. Let's talk about US M2 money supply. As we can see here, the massive amount of print all the way back down to, of course, the tightening that we are currently seeing. This makes the market unhappy, and it's partially why we are where we are. But of course, eventually the Fed will pivot and go back into printing cash. They can't stop now. They will continue to do it. They just need to deal with inflation. If we didn't have inflation, there possibly wouldn't be the concerns we even have in the market at this stage. In terms of what Wall Street's S&P 500 calls are, here are some of the updated ones. You'll see a massive difference between them all. There's anywhere from 4,900 down to 3,600. It's funny to see how big a difference the year-end targets are. Some of them maybe haven't been updated, I don't know, but to call a 4,900 by the end of the year, JP Morgan's going out on a limb. That's a big one. Let's talk about the S&P 500 volatility as well. Remember, usually midterm election years are volatile due to midterm elections. At the moment, we're in kind of the calm before the storm. We've seen a huge amount of stormish action on the VIX over here leading into the June-July period. We've seen a calm and a recovery. Do we go back into the storm August, September, October? Do remember, this still looms on the horizon and no one's talking about it again. And it is something that's in the past traditionally created volatility. Speaking of volatility, just remember implied volatility moves are good to know. Apple, of course, with the big announcement here coming out, we know that they're expected to be, according to the options market, around 5% in terms of volatility on the stock. Good to know if you're trading it for the day. And so far, these have been pretty good. Microsoft's one was pretty much spot on, and Shopify's was spot on as well, with that 12% plus in terms of implied volatility. Beat rate continuing to be pretty strong here as well. 70% beat rate, 433 beats, 190 misses. That's in line with most earnings seasons. Now, is this beating great expectations? Absolutely not. But it's beating the horrible expectations that the street had, which gives an excuse to allow the market to go up, which of course is what's happening right now, convincing a lot of people that the worst is over. And well, we'll soon see whether that is going to happen. Let's take a look at Apple. Apple here after the close on Thursday, along with Amazon, Roku, Intel, and some other big names. This is going to be where the volatility really lies. And of course, if Apple and Amazon start to sell off, the market could pull back before potentially even still resuming a bullish run. We'll discuss that soon. Let's look at the session in detail. It came out very strong. You'll see the markets all really had a big bull run on them in the futures market. Some of the markets were opening up as much as almost 2% by the time we got the open, such as the Nasdaq. They ran kind of flat to up through the day, and then comes Papa Powell and the FOMC. Boom goes the dynamite. All of them picked up. We made new highs on the SP500, closing a gap that's been there for some time that we've been hoping to be closed. And really, it was the story of risk on. We saw almost all of the great solar kind of indices and clean energy, the two hyperstock kind of market trajectories going up heavily. This meant that anything to do with hyperstock or growth was firing. Semiconductors, technology, clean energy, solar, consumer discretionary, they were the sectors to be in for the day. Super explosive moves, while the defensive sectors were up, but not so much. Certainly worthwhile paying attention to as we continue probably what will be a rally here over the next week, hopefully. Let's move over to the VIX and get into the charts. The volatility index. This is the fear index. And this is where things really change. Basically, the market came down here and it went underneath the 24. Now, we know that this has happened twice this year so far in 2022. We had it over here, we fell down, and we moved into the 20 zone. We did it again, and we moved into the 20 zone. The calm before the storm. In both cases, what did we have after that? Incredible amounts of shorts coming back into the market. We're using the VIX, we're using the 20 as a bit of a barometer. Maybe the 20 will hit when we hit the 20 moving average, somewhere around the 4,100 to 4,200 zone on the SPY. This could be a very nice trap if Wall Street was wanting to set one. Speaking of traps and of course volatility in general, it's time for us to talk about the sponsor of today's video, which is Tiger Brokers. And do remember that you need to be aware of all of the economic events coming up. One of the things Tiger Brokers has in particular that's excellent during this earnings season is an ability for you to see all of the earnings within weekly, daily, or monthly types of overviews. You can just quickly check the Thursday, see all the big earnings, and you can also set it up with your watch list. One of my favorite things to do is also check out the stock before the earnings announcement. Obviously, you've got here the TA. We'll talk about Apple right now, and let's discuss what's going on with Apple. We've got a trend line that's just been breached ahead of earnings. Is that a good sign? Well, certainly a breakout here is a big thing. And as we know, the Apple is known to have that kind of buy the rumor, kind of ramp the effect of the earnings and then sell afterwards. It's part of the reason why August and often September are weak for a stock like this. They have this great run into the announcement, and it's like that buy the rumor, buy the fact a little bit, and then sell straight after because there's no catalyst to continuously go up. Another thing that I love about Tiger Brokers platform is being able to see so much information so quickly. So you can have a look here, the analysis, you can see the short interest percentage open on the stock. A lot of people love to see that. Some other things that I really like, the analyst price targets. I don't really particularly like any one analyst, but you can see here that analysts have added buy targets. It's now at 27 in terms of the current. 1 month ago, only 26 analysts believe it was a buy, and they've changed their mean price to 183. So at the time of this recording, if you were to look at their mean 12-month target, you'd say, well, Apple technically is undervalued compared to where they expect it to be. If you need any news or anything like that as well, it's all here in the Tiger Brokers platform. And of course, if you're interested in using the platform, there's a whole bunch of special offers for everyone around the world, including a special offer for Australian viewers out there. So let's talk about the dollar index. And this is the key probably to the markets right now, the US dollar, and what a trap it was. We've talked about the key levels here. And just quickly before we go down to the smaller timeframes, let's discuss this. the trend line that's being put under pressure at this point after the FOMC. Now, the US dollar is heavily extended. If we go to a weekly chart, you'll notice over here that we had the previous resistance point in the excess back in 2002. Now we're here, 2022, another 2 year, and we have hit the excess phase. Now, why can we call it excess? It's a mixture of things. It's partially just because it ran so much and so quickly, but also because we moved away from the 20 moving average. Now, the 20 moving average on the weekly sits around here at this stage, around this area that I'm drawing with the arrows. And what we're finding is that it's potentially time now to start talking about the markets turning around and going a little bit more bullish as the dollar index goes bearish. This was the trap. Notice we talked about this being the key resistance break to go bullish on the US dollar. What happened? Just before the FOMC event, it takes out the previous highs and grabs liquidity. An amazing trap here, and a few people probably did get trades towards the short in here and here. And of course, that's an amazing little short opportunity, especially going back into where we are right now. In the next 24 hours, we probably expect for the US dollar to have some form of recovery, then hopefully a short opportunity to reappear for traders, and then to push under the low. And if you do get a low similar to the way we've drawn it here, expect some serious sell-off on the US dollar at that point. That's going to be very significant. Notice the way this zone is holding up. 1, 2, 3, and 4. If we do end up making a new low, it's incredibly significant, and I think quite a few people will be piling in to shorts at this stage in terms of the street. Technically, distribution turns into weakness, and a lot of people are starting to spot that on the charts, or hopefully they are. It coincides with something like the euro as well. We talked about this defended area. Notice just as the FOMC event occurs, what happens? We grab liquidity, effectively take out the stop losses all around here, and then go bullish super after that. Great trades here in the last 24 hours. If you zoomed in on the small time frames, there was real opportunity in this point exactly around there. And also even after where we are right now, an expectation of a pullback somewhere around maybe that 10150 area, and a potential buy in here could be quite strong on the charts. Of course, practice your own risk management, etc. Let's talk about copper. What's going on there? Well, the continued strength is going through. We've talked about $3.55 for copper. We're looking for that. Trend line still intact, new peak. Things look good. No reason to really hate on the copper at this stage. And it looks like metals in general are recovering with this bullish movement throughout stocks at this stage. Move over to gold, another nice one. Gold still has to break this level. So let's take a look at gold on the weekly here, and we'll basically go back to the 2018 lows, and you'll notice that's where it hit at the same point as it hit our defended zone recently. There's a very good chance that gold could have its low in for now. If yields continue to drop, and we also see a switch in the money flow, which I will be updating subscribers on this channel too, and of course join our Discord as well if you're interested in finding out more about that. Gold may have actually just found its low for the short term, and this could be a significant low for gold, because if this low is in, there's even chances of something ridiculous like $3,000 an ounce for gold moving forward over the next couple of years. I said random numbers like that, and the reason why is because these lows are very, very significant. A switch and a change here, especially with 10-year yield going down, is very, very strong kind of gold bull signs. We need to break through a lot of stuff. Of course, $3,000 wouldn't happen. Yes, tomorrow it would be a long, long way away. So let's talk about what's happening right now. The defended area, the swing or the spring attack that happened on it. We actually discussed this in the previous video. We talked about how we expected maybe a low to get taken, and then of course for it to rally back up after that FOMC event. And that's exactly what happened. Right now, hoping for pullbacks for traders to be allowed to get back into a trade like this. So this kind of area here is very key. This area is around that 1726. And by the day, I get more bullish on gold, mostly because the current setups and the current way that this market is working seems very, very good. Still have a lot of problems with 1750, but if we breach that and then we pull back, I think a lot of big traders will be coming into this. And of course, we'll see that in the money flow moving forward. US oil also doing okay. Not too sure if I want to call anything here on this one. We're looking at this and we're saying, well, does it look decent? Sure, but it's still got a series of lower highs coming through as it's declining. We know this is a massive support. People that have bought this support so far around 95, probably smiling each time thinking, how good is this? I keep buying and it keeps working. Maybe if you get rid of that high, that daily kind of rejection high here, you can feel a lot more bullish about this. I'm not going to feel that bullish about oil though until it breaks through 105.20, and then I'll be looking for pullbacks to take towards the long. I'm pretty patient here, and that's one of the things that we like to talk about in this channel. Patience, react, don't predict whenever possible. And a few people have mentioned this in the comments. Well, how can you be patient and you miss out on opportunities? Hey, simple as this. There's plenty of pairs out there. We cover so many daily. Come from the level of abundance mindset. In trading, are there new opportunities every day? Yes. If you missed a 4% move on the Nasdaq, who cares? What was your risk? What was your reward going to be? That's the big one. 4% move doesn't mean your risk reward was good. It just means that it moved 4%. So you've got to think about it as how much risk are you putting down, how much reward, and ratios. That's what trading's about. Abundance mindset, guys. If you do that, it makes it so much easier out there. And it took me a while to really realize that. I used to go chasing as well. Don't worry. That's something that everyone has done in their time. And nowadays, you just think, well, there's another opportunity somewhere. We're seeing so many opportunities in the market in 2022 for traders and for potential longer term investors. Let's talk about Tesla. Nice rally here. Obviously went in line with the market. Still got a gap left down in these lows, but look, Tesla might come and fill that later on. Looking pretty good. If the stock market goes up, you probably have to expect Tesla to go up with it. But I'm kind of expecting, as you'll see soon, maybe a little bit of a pullback on the stock market before the rally. And we'll discuss that. Not a huge pullback, but a little bit of one. Let's discuss yields as well. 2-year versus 10-year yields. This is not a good sign for really, I guess, the medium term here in markets. It's the highest point. Basically, the 2-year is heavily inverted versus the 10-year. And that usually has shown us a recession. Now, the White House is changing the idea of what a recession is, but we still need to pay attention to this. It's not a quick indicator that means, oh, tomorrow it's going to crash, but certainly still there and not that good to see. Let's take a look at the DAX. We've talked about this box zone. Obviously, it was more about risk on in the previous session based on what the Fed was saying. And because they didn't raise 100 basis points, it was tech that was doing the best. Now we look for the DAX to come out, and that will show us more of a broad-based kind of recovery, more metals, more energy, more financials doing better. Look for the high to get taken here, which is around 13,440. Move over to IWM. Small caps did really well. New high here. Great to see. Filled the gap. Nice. That's fantastic. Got another little gap in here that we could be filling. Looking for IWM back to 190, ideally moving forward. We'll find out whether it can do so. Now we'll move over to the Nasdaq. So no new high, but it basically made an equal high. And you can see here it's pulling back a little bit on the futures market. Let's take a look here at the 15-minute chart just to get a bit of an idea of how this moved up. So it basically did something that I like very much down here. It then rallied. You can see the first breakout here, which was significant. We took that level and that kind of created this huge bullish rally. And at this point, you're kind of expecting the market to take a cooler. It put on all of this bullish movement through the FOMC statement. A lot of people would have bought that. What's the best thing for you to do now? Take it out and at least take the market back down. So somewhere around this box area, around maybe this 12,400 area, we're looking for turnaround stories. That's where I think a lot of day traders will come back in. They'll say, well, maybe we can get involved in the market towards the bullish side, but we've got to be patient and wait for those pullbacks. Somewhere around that 38.2 to 50 fib level and those previous highs and previous lows. Probably orders here that they'll want to defend. A good level to be looking at with your own systems. And of course, it's just a technical level, guys, but certainly something that we're checking out. SP 500, where ideally, well, we just filled the gap that's over here. Let's have a look at this. So we can go down here to the 1 hour, check it out. Here it is. There's the gap fill. Finally did it. So that was really nice to see. And now the market's made a new peak. So there's some key levels we need to discuss. Firstly, that 39.20, 39.10 zone. We discussed it earlier this week. again, we need to talk about it. If this level is taken in the future, let's say we take 39.10, at this stage, that will mean the bears are back in control of this market, and you would need to fade rallies at that point. That's where the technical change in trend really occurs. So be very careful and probably set alerts for something like that. I might not be so bullish if this market goes down here and it takes out that and does something like we're talking about here. When it comes back up, I'll actually be looking towards the shorts at that stage. But for now, we're above that zone. Pullback should be met by buyer demand, and ideally we move towards our monthly R1 pivot sitting around 4,100. And what else is there? So the 20 weekly moving average, there it is, sitting just around that 4,100, certainly a key zone. And as we've seen, we've breached it before, but around here is where we want to be really watching that weekly close. So this is going to be super significant. We're very close to it now. And for people that are remaining bearish in the markets, it's not easy, because if you were trying to place bears all the way through here, you're probably getting slaughtered. The reason that we've been bullish is because everyone's so bearish and the markets are recovering. A lot of people are now saying the bottoms are in, possibly in the Nasdaq. It's very possible, but usually you'll get a secondary pullback to flush out. And that's going to, at least you would think, push down to a 37.50, if not even lower on the SPY moving forward. Let's go over to the US 500 futures. This is kind of like a little boxed zone that we're looking at here. Previous high of 39.82, so that's a pretty big level, and movement down into here. Some kind of turnaround in this area would be really nice towards that bullish. Again, watch the zone down here between the 39.20 and the 39.10. That's going to be big moving forward for the bears and the bulls. Let's move over to crypto. Big one here for today's video. Obviously, we've got here the rainbow chart, the log scale. We're in that basically fire sale period. A few people asked me to go into it a little bit more. So yeah, look, I mean, if you're a long-term investor, possibly around here is an okay point for Bitcoin. I still have an opinion that it rallies and then it falls lower later on, potentially down into even the 10 or 12,000. But so many people expect that for investors, they may look at this level and say, hey, Bitcoin looks a little bit better. We can also see here that in terms of Bitcoin versus the alt season, we're still really in a Bitcoin style market. So that basically is telling us that Bitcoin still rules, at least at this stage. Look at the top 50 performance over the last 90 days. Basically everything is horrible and pretty much everything is doing worse than Bitcoin. There's very few positions in crypto doing better. In terms of search dominance worldwide, Bitcoin still reigns supreme. 59.9% of all searches are for Bitcoin, then Ethereum, then funnily enough, Doge. It's no longer XRP. And I still don't know how Tron gets in here, but anyway, Tron's at 4.8% of the searches. Ethereum looking very good as well, sitting around that kind of undervalued point over the longer term, but it has ducked underneath it before, like we saw here. And it's all got to do with the halving cycles. Remember, if you think about it, this is all a halving cycle concept. At the moment, we expect lows. We also expect it to hold around here. And then hopefully coming into the next halving event, you see that nice ramp in things like Ethereum and Bitcoin. That's what's traditionally happened. From what we see on the charts, we took out that high here. We ended up doing a very nice little buy zone that we discussed in the previous video. That was okay if you did get it. But now we hope for pullbacks back to this area here around that 22,000 and for buyers to come back in. So around 22,000, hopefully we'll see a bid if we do start to fail into that event. Let's talk about also what else we've got going on. There's so many things. We've got the FX Evolution Twitter, of course. If you haven't already followed, why not consider doing so at FX Evolution? We're always posting stuff there. And remember, there's still more economic news to come. Thursday, 8:30 a.m. New York, we've got advanced GDP. Then we scroll down and we have core PCE price index, 8:30 a.m. New York. And we've got Apple results. We've got so many things. As always, if you haven't already, check out Tiger Brokers, the sponsor of today's video, and check out the special offers in the link in the description down below. And of course, subscribe, smash that like button. We'll see you in another video very soon. Bye for now, guys.